latest investment offering, our 30th investment offering, the Townhomes at Bluebonnet Trails. We've been scouring the market for a BTR that made sense to us, and Judah found one in Dallas. It's in southern Dallas in a up-and-coming emerging market in Waxahachie, Ellis County. It was built in 2020 initially, and then the last building was constructed in 2021. 114 units, average square foot 1,843 square feet. This is exactly why we love this deal. Number one, this deal hits all the criteria we wanted. We wanted a top location. DFW fits that. Tons of migration, tons of growth, tons of jobs. It's a high quality asset. I mean, this was built literally like 2 or 3 years ago. There's no deferred maintenance. It shows well. It's 97% occupied. There's probably a wait list to get into this thing. Thirdly, it is a core plus strategy. What does that mean? Again, we talked about nicer, newer vintages. That's what we're talking about. This is essentially an A-class property that attracts a higher level tenant base. We also want to make sure that this appreciates in value. And so the sub-market is what we've analyzed very in detail, and there is a growth trajectory we're seeing around this complex. So not only is the asset extraordinary, but the sub-market as well. Now let's get into the numbers. This cap rate we got the deal at is almost at a 6% cap rate based on T3 numbers. The expense ratio is 49%. What that means is normally expense ratios at 60, 70%. This is only 49%. It's easier to maintain this kind of property. The 100,000 unit shortage in DFW is promoting this high occupancy.
One of the great things about this deal, it has a lower risk profile of a new deal, but the upside of those value-add deals. Here's where the upside is. Rents are simply low, right? These people bought this property a number of years ago. It probably was not fully occupied yet. They added their value by filling all the units. And one of the ways they did that is by keeping rents lower than they were in the market. And now we have the opportunity to come in. It's fully stabilized. Operations really humming along nicely. Rents are simply low. Average in place, just about $24.55. Average market rents in the market, almost $2,700. All that means that we get to go in right now and start raising rents to market where they should be. And that's a beautiful delta. $240 per unit per month is a tremendous upside. We usually have to spend about $12,000, maybe $18,000 in order to get that type of upside. Again, lower risk, higher reward, and that's what's so attractive here. Double car attached garages inside unit entry. You sometimes are happy to find a property where half of the units have garages. You're happy if a quarter of those you can access from inside the unit. Here, every single unit has a 2-car garage. It's actually on the back side of the units, so that means it leaves the front of their property open for a yard.
So you see in Class A, you invest $100,000 starting in year 1, you're collecting that 10%, which equals a $10,000 payment. That's broken down into 12 monthly distributions, and that goes on through year 5. When we get to the disposition year in year 5, you've received the returns that you're due, so you have the repayment of the $100,000 you invested, and you've achieved a 1.5x multiple. For Class B, you're getting slightly less in the cash flow, so you see it starts at $5,000 and trails up to $6,500 annually. So still same division by 12 for monthly payments, but you're getting that equity split of 70-30, which adds on $60,226. So you can see for the same hold period and the same investment amount, you're getting an extra $38,412. You're taking on a little bit more risk, but you're getting pretty nice reward for it, as it should be. Reserve class is going to follow the same dynamics as Class B, except the equity split is going to shift from 70-30 to 80-20. So you see it's 5 times the investment, so the distributions look a little bit more, but they're the same percentage. But you can see you're getting closer to a 1.98 instead of a 1.8 equity multiple by investing through reserve. Like I said, reach out to my team. We can dive through this more if you have more questions. One of the other benefits of these deals is the bonus depreciation. What we do every time we acquire one of these properties is a cost segregation study. And what that allows us to do is accelerate the depreciation from the overall asset. You basically get to take the straight line depreciation and for certain tranches and buckets of things that depreciate at a lower rate, get accelerated into year 1. So what the IRS has allowed for over the last few years was 100% bonus depreciation. So if the property creates 10 million and it's 100% bonus depreciation, you divide that 10 million by the amount of equity that comes into the deal, and that is the percentage that you get from your investment amount. Now that we're in 2024, it's been lowered to 60%. So that same $10 million of depreciation, we can now capture $6 million of bonus depreciation. So that $6 million will get divided by the same amount of equity. It'll be a lower amount, but also keep in mind, as we go through the other years of this period, now that we're only accelerating 60%, there's more on the back end years. It's not all lost, but keep in mind that moving into 2025, the step down is going to continue. So it's 60% this year through the end of the year. So any property that's acquired before January 1st will qualify for 60%. Starting January 1st through 2025, that same $10 million of depreciation is now only going to capture $4 million of depreciation.
3 and 4 bedrooms. BTR units that have 2 bedrooms are in demand. We have 3 and 4 here. We're there already on site for the due diligence. I got pointed out to me where the bus stop is. This is a top school system, A-rated school system, one of the best ones in DFW. The school bus comes to the property. There's more than enough space. When we were doing diligence, I saw cribs, I saw homework stations. People are staying here for a long time, driven by phenomenal unit mix of 3 and 4 bedrooms. These are not people that are looking to move somewhere for 6 months and skip town. These are people really investing in the community and living here for an extended period of time, increasing the tenancy periods, which, by the way, brings down turn costs and reduces our operational expenses. Quality of finishes here. Granite countertops, modern shaker cabinets. It's really spacious. There's a kitchen, a full pantry, stainless steel appliances. They get washer dryer hookups. A lot of these units bring their own washer dryer. If not, we will provide them, again, for additional rent. Insanely large closets. The first floor bedroom and the 4 bedrooms have 2 walk-in closets for that first floor bedrooms. Spacious and meant for that lifestyle that we're looking to attract. And this is the layout of the property. It's compact. It's driving a lot of revenue per acre. And on these gray kind of blocks around it, as Chris mentioned, you have single family homes, 2, 3, 4 bedroom with yards, kids in the neighborhood. It's one seamless area. We benefit from a much larger affluent housing community. This is a rent comp of the BTRs in DFW. Nearly $2,700 per month is the market rent. And again, we're well below that right now. $2 per square foot, and we're at $1.30 per square foot. This gives you an idea of the upside. These are data points that we look for, that we lean on. We're not just hoping for an increase, but this is really a measured statistical analysis that supported our investment thesis. You always look at a lot of factors, a lot of angles when looking to buy a property. One of them is replacement cost. If someone were to say, I wanted to build this property today, it would cost them $470,000 per unit to build this property. You gotta buy the land, you actually have to do the construction. If someone's gonna be buying that unit, again, this is per house because we can sell them off individually, the developer fee gets baked in. There's all the architecture plans, the engineering plans, and the soft costs. We're getting it for a $160,000 discount per unit. So again, when we saw that, we knew there was value intrinsically there as well. As Chris mentioned, each one of these homes is separately parceled. If the DFW housing market continues as it has, exiting at a per unit basis to owner occupiers might be our exit strategy.
One of the things is called the Star. This is sort of the headquarters for the Cowboys, 91-acre complex created by Blue Star Development, which is Jerry Jones' development company. Its economic impact is in the billions. What happened was there's a town north of Dallas, which many of you in Texas know, is called Frisco, and it was just a sleepy town, and then suddenly it just became into this bustling center, the new Dallas, if you will. There's something called the Gate, there's Wade Park, essentially entertainment complex, hotel complex, sporting complex, restaurants, shops, office parks, all in a short 5 mile radius. Universal has been looking for years to find the next location of one of their parks. They chose Frisco, Dallas, and it's going to open in about 18 months. And this is going to be a huge economic driver. The PGA Tour is now having one of their main events in Frisco and one of these beautiful golf courses, along with hotels and a conference center. So this is Jerry Jones. He is not only the Dallas Cowboys owner, but he is also a driver for North Texas real estate. His company is called Blue Star Land Development, and pretty much where he decides to acquire land essentially sprouts up a new city. He has proven the concept in Frisco, and now 7 minutes from our asset, Bluebonnet, he is now creating a 120-acre mixed-use business park. His initial inception investment. We'll see what else he develops after that. Statistics about the DFW. Second best real estate market in the country based on Pricewaterhouse. Median income $75K, 8 million current DFW residents, strong rent growth, 1,500 corporate headquarters, 6th largest economic output in the country, 4 million jobs. Current population is like 7, 8, 9 million. It's going to go through the roof over the years. This is also very business friendly and worker friendly. There's no state income tax, there's no imposed payroll tax. And 60,000 people moving every year into Dallas-Fort Worth area. Ton of job growth, major employers in Texas. 21 of the Fortune 500 are here. So it is sort of a mecca for attracting top talent, top employers. And this is based on the educational system, the workforce, the infrastructure that's already there. Texas is the world's 9th largest economy with close to 2 trillion in GDP. The interesting thing is it's starting to become a headquarters for a lot of companies and very diversified economy. There's education, energy and mining, computer manufacturing, business and financial services, defense, security, health, construction, food. So if there's a recession, if there's a correction, if there's a slowdown in certain sectors, it doesn't make a huge dent in Dallas-Fort Worth because they're so diversified. There's jobs everywhere. And the specific property where we're at, there is a diverse group of employers for the asset. And probably as we get the due diligence back, we'll probably find, as what we find in a lot of our properties, a lot of ed and med. What that means is education and medicine, nurses, physicians, practitioners, all that kind of stuff, which are usually economically resilient employers. It's becoming a technoplex, meaning major high-tech hub, startups. There's a lot of tech industry, and it's helping spur the Texas economy. This is the Dallas Park Bridge, economic impact about $300 billion. Beautiful park, sort of think Central Park for Dallas. Baylor Scott White is a healthcare network. They are employing 6,000 active physicians, 40,000 employees, $2.5 billion of annual impact. McKesson, one of the big leading healthcare companies, decided to move from California to Texas, similar to how Elon decided to move a lot of his companies to Texas. And so there is a migration, there's a flight from California due to the regulations, and Texas is the recipient of that transition. Third busiest in the world, $37 billion of economic impact. Tons of attractions. The World Cup is coming to Dallas in 2026. They're predicting a $400 million impact. A lot of battery and storage is happening for electrical vehicles, and this company, Hexagon, is producing some of that. UT Southwestern Medical Center, this is interesting. A $5 billion pediatric health campus in Dallas is being created. They plan to care for over 3 million children in the Dallas-Fort Worth area, and they're building a $4.5 million square foot campus. One time I went to visit a friend in Austin. He took me to a mechanical bull, but if you really want to ride the real bulls, then you need to come to Mesquite, which is the official rodeo capital of Texas. $600 million of impact, which I was not expecting. And in more than that, because there's so much impact, they're building more. So there's a huge $4 million upgrade to the complex. The school system here are phenomenal. We have Southern Methodist University, SMU, TCU, Texas Christian University, and many others. $27 billion of impact based on the university system. North Texas football, $2.1 billion to the national economy. And obviously, the most valuable team in the world, they say, is the Dallas Cowboys. Enterprise value of $9 billion, generates about $1 billion of impact. Other sports teams, Texas Rangers, the Mavericks, the Dallas Stars. There's an MLS team called FC Dallas Speedway. The DFW is recently ranked as #1 for investor property returns in 2023. So that's important to note. And these are all the other highlighted cities. So as you can see, this is where Viking likes to hang out. These are the top cities that have the greatest returns. So as highlighted here, there's a huge election coming up in the next 30 to 40 days. We don't know what's going to happen in the future. Whoever comes into power, renew the bonus depreciation. Will they reverse it? Will they get rid of it? I'm not sure, but I do know that you want to take advantage of it this year. It's 60% bonus depreciation, and it will help you save on taxes and maintain your wealth. And so there's multiple ways to invest. We have some assets, 1031 exchange. You can invest in the trust, a self-directed 401k. If you have cash or savings, you have other assets that are not performing, you can liquidate them and invest here. Self-directed IRAs are also acceptable. We have links to book a call with my team. We're all on standby, ready to answer your questions, take you through the underwriting, answer your specific financial situation, and see if this investment makes a lot of sense. Scan the QR code, and the cool kids like to do this tech stuff. You can text Townhomes. And so I suggest getting into this deal soon. I mean, it's probably, I don't know if we're going to be able to do another deal this year. We'll do our best to try to find another one, but probably this may be the last deal. So if you want that bonus depreciation, definitely take advantage of it. Book a call, multiple ways to do so. And so thank you guys. Appreciate you. Love all the support. Looking forward to you guys joining us on this project. And I hope you guys have a really good day.